Welcome to the Closing Bell on the 3rd of September. Today we're going to go behind the scenes a little bit. I'm going to show you a recent trade I've done with members of my service because hopefully last week you were watching and you saw my presentation on uranium where I was trying to point you in that direction. Well, over this week we saw a huge run in uranium stocks, and I'm hoping a few of you managed to get on. But I did send out a trade alert last Thursday in a little stock, and it was up about 30% in 4 trading days, got within a whisker of the initial target. So I just want to take you through that process of entering the stock, timing, how I set up a trade, set up the initial targets, creating the free option to see what's coming next, lowering risk, lowering the entry price by taking part profits, and just give you a bit of an outline of what I actually do for my day job, which is running and sending out trading ideas to people who are, taking their trading seriously and have a bit of capital to work with, and really are, looking for someone who knows what they're doing and has experience in the markets. This is really what I do, and I'm hoping that you've been enjoying the Closing Bells recently. And, I've been telling you all about the markets selling off. Hopefully, if you have been watching for a few months, as I've been warning you about where markets were going, you've been heeding those warnings, and it's added a bit of value to what you're doing. And just recently, I've been saying, watch out, the market's probably going to turn down again. And it has. So really, I'm hoping that through these Closing Bell videos, you're getting a sense that the model I use is pretty useful and quite helpful. And look, I'd really like to invite you to a presentation I'm doing next Thursday. If you are enjoying these videos, come along and check it out, where I will really go into detail about how I go about making money for people, and have done for years. My strike rate over the last 3.5 years is up around 60%, and we make about 2.5 times as much on a winner as we lose on a loser. And you start doing that over time, and you'll see some pretty good returns. And I do it in a way where I'm really managing that risk all the way along. And I want to show you the trade that I've just done, just to give you a sense of how I do manage risk, and hopefully that it does add a bit of value to you anyway. So please, there is a link in the video, and just click on that link to sign up for my presentation next Thursday. I'd really love you guys to come along. You're the ones who have been watching and interested in what I'm doing. So that's where you'll get a much deeper understanding of what I'm about and how I help people. So yeah, please join and click on that link and just sign up. We don't do any spamming or anything like that. That's just so you can be signed up and get reminded for the event next Thursday. So let's just have a look at this trade now. I want to give you a sense of what happened in last week's Closing Bell. It was all about uranium. I really tried to drive that point home. And boy, it was a huge rally that we saw. This stock is deep yellow, and we actually went into that on the Thursday, and the instructions to buy at 89 cents, and my initial target was up at $1.21, and stop loss down at 49 cents, which you can see is below, a major low that was created recently. And you'll see if we go up close, the stock took off this week and really rocketed higher. And just 1, 2, 3, 4 trading days later, was up at $1.19, 2 cents from our initial target. So that's up 30% in about 4 days on that position. And the way I manage risk, so you can get a sense of how I go about it, is if we had hit that $1.21, we'd sell a third of the position. So you sell a third of your position at this initial target, which was obviously retesting an old major high, and was also actually based on other calculations, which is looking at major waves, as I talked with you about, when I'm looking at all these major waves and the sell zones of those waves. You can see there, that's why we got resistance, as you can see there a while ago. We've got the top of the sell zone coming in at $1.21. So that's the reasoning for the choice of that number. And when we look at, if we bought at 89 cents and then sold a third of the position at $1.21, that would mean our break-even price would be 73 cents. So if the stock fell over all the way to 73 cents after we took the part profit, we'd break even on the position. So the idea being that by taking that part profit, you're lowering your entry price. So your average entry price falls from that 89 cents down to 73 cents. And from that point on, you're either going to break even or make money. So you're still giving the stock a lot of room to move because we're in a uranium stock. It's quite volatile. So you want to make sure you can allow the price to move around all over the place. But by taking that part profit quickly, you're just lowering your stress levels massively. You're allowing yourself to then sit back, see what comes next, and not be stressing out about the fact that the price is flying all over the place. So from that point forward, once we've created that free option, I'll then be looking for a next profit target so that we're looking at, possibly a breakout, which will come, and if the stock can break out and start trending, I'll then wait for, that next profit target if momentum starts to wane, and I'll sell another third of the position. And from that point, usually you're free carried on the position completely. So the stock could go bankrupt and you'd walk away either with the capital you had or with a win. So it really is setting yourself up to be in a win-win situation in the market, because if you're buying stocks and you're just holding onto them, hoping that one day they'll go up, the volatility is always going to end up whipping you out. You have to manage your risk every step of the way, and you have to use the charts to help you know where those points of resistance and support are. And I've been showing you for a long time how I analyze overall markets and know about where the momentum is, where the risks are. And really, that's what I'm doing on a day-to-day basis, taking people through, waiting for these opportunities when they turn up. And, entering the stock you probably would want to know about that. And I don't want to give you too much away on that. But if we're looking at momentum shift, and I'm looking at a stock that's trending, I'm waiting for these false breaks of major levels within uptrends. So as a stock is trending up, and I'm telling you about these distributions that occur, these ranges, and then the false breaks of those ranges. And when you get a false break of the low of a range, which clears people out of their position, and things turn back up and the stock is trending up, they're the moments when I want to get on. So I'd been watching that stock for a while. We had the false break on the weekly. It started to turn back up. I got the weekly buy pivots, things starting to say momentum is turning back up. Then we got the news about Japan saying that they're going to go ahead and start firing up their reactors again. That for me was a really good catalyst for the uranium market. Uranium ETFs were turning up. And that's when I was like, right, it's time to strike now. So all of those factors are at play all at once. And once you get onto one, once that momentum does shift, you have the false break, it's trending up, the momentum shift can be quite rapid, as we've seen just in that last week. And that's when you want to be jumping on and then taking that part profit quickly. So you're creating the free option, and then Bob's your uncle, and you're sitting back. And from there, you really don't care, because you're either going to break even or you're going to make money. So that's really some of the nuts and bolts of what I'm doing with people. And if you want to learn a bit more about it, please come along to the presentation next Thursday, and I'll explain far more for you at that point. So, yeah, just sign up if you could to that event and check it out. I think it'll be really interesting. I think you'll learn a lot. And if you have been enjoying my videos, I think you will definitely get a lot from it. All right, cheers. Well, I think that'll be enough for this week. I hope you do come along, and otherwise I'll chat to you next week.